looking at crude oil, we had a big spike above $100, which is usually a bad sign if the price remains above $100 for at least a few days. And I'm glad we saw the market come down below $100 again. This doesn't mean the volatility has ended. I mean, it's just um, 1 week into the war, so it can escalate. But this is a good sign that the price of all oil is going down. So that's something we should be watching. The other um, ticker you should be watching is the VIX. The VIX is also spiking a lot. It went all the way up to 35 dollars, and now it's all the way down to 25. The level you should be watching for the VIX is 27. So if the VIX remains above 27 for at least 11 days, then it's basically a bad sign for the returns for the rest of the year. The probability of the market ending red for the rest of the year is much higher if the VIX remains elevated above 27. This is based on quant data. Now, if there's just one spike like we had today, in hindsight, we will know if it's just one spike or not. But usually, when it's just a spike, like here and like here, these are opportunities where you should be buying tech stocks, um, the S&P, anything that has great fundamentals, because looking after 6 months, it will be green almost 90% of the time. So that's something to keep watching. Let me see if you guys have questions. Do let me know. Now I'm gonna check at Bitcoin. Of course, Bitcoin had a nice day. So we had a 4.5% pump today after the rejection here at around 72. So as I mentioned in my last blog, I tried to go long here after reclaiming that 72, but I got stopped out after the failed breakout. And for now it's still in this range, stuck in this range actually. So there's not much to do for me with Bitcoin right now. I think I might go long if at least it can reclaim this level here, because I'm not sure if I want to play in this level anymore. You will get chopped away, or you need to be glued to the screen 24/7. So the other thing about Bitcoin, of course, is that we are still in a declining phase of the 4-year cycle. So if you look at the monthly view for Bitcoin, we know that the cycles they take around 4 years, where it's 3 years up, the green box, and then 1 year down. And it did exactly the same thing like past cycle, topped around month 35 and then came down. And right now, we do have 1, 2, 3, 4, 5 months down in a row, which is very unusual. So I would say March could be a bullish month. That's why I took a small trade in a stock called Circle, which is more a leverage play to crypto. And this trade I took when there was this sweep of the low of the IPO, and the monthly close was bullish. And since then, it had a nice rally. I took some profits already, but I'm just keeping it for further continuation because I was leaning more bullish for March in the short term. So that's for Bitcoin. Overall, yeah, I still think this will be a rally. So a rally into a lower high and then continued lower. So that means something like this, where it goes higher for a lower high, but then um, lower for the next couple of months. So I'm not sure how low it will go, but based on the past cycles, we can assume that after 1 year, the bottom must be near, and 1 year after the top is around October 2026. So that's the target I have in my mind. Of course, we will see how the price action evolves. I'm open to the idea that we bottom somewhere closer to the half of the year, because of course Bitcoin is pretty oversold here in the near term. Let's say it just continues lower and goes all the way down to 50K, then I would be definitely be buying if we didn't had some sort of counter trend rally yet. But for now, my base case remains that, yeah, Bitcoin is likely to remain boring sideways to down until the end of the year. Let's look at how the stock market did, because it was a wild session where you can see on the daily chart actually a big drop into support, actually below support here, but managed to reclaim that level and close above it. Um, the moving average that I usually watch to see if there is a confirmed downtrend is the 50 uh, moving average and the 150 moving average. I even made a panic drop indicator, so it's called the panic drop um, indicator here, where it's showing on the daily chart the the two moving averages, and when they cross like they have here, it turns red. um this indicator is very useful in long bear markets like we had in 2022, but not very useful in bear markets where there is a sharp parabolic drop and then recovery. So, like a V shaped recovery, you can see that once it's red, um, the price is already down. So, selling at that point is quite useless. And selling at that point and buying back when it crosses again, you will make a loss. While if you do it in a prolonged bear market, which we only know in high side, of course, you can see that selling here and buying here is much more useful. I actually give this indicator for free for people who enter the Panic Drop newsletter. They get a free gift where I give instructions on how to get it. So yeah, if you like this indicator, go subscribe. So yeah, on the daily chart, quite the recovery. Um, Okay, it's a big sweep of this low as well. A nice close. Let's see if we can just continue higher if things settle down on the macro view, of course. But my game plan is always to buy when things go lower. I was buying today tech stocks. I was buying Meta, Amazon. They had a big drop and then they managed to recover during the day. But if they continue dropping, then I'll be fine. I will continue buying as well. I still have around 15% cash in my portfolio to buy this year, because we know going into this year that this was going to be a midterm election year, which on average have around 15 to 17% drawdowns. So that's how I prepared my portfolio. And I want to buy that dip just because when earnings are growing as fast as they are right now, it's around 30% forecasted for tech earnings to grow. You want to be a buyer. Um, Eventually, price will catch up with the value of earnings. It's actually 98 or 99% correlated, the stock movement with the earnings of a stock. So when a stock does well and is earning and growing their earnings, it's very bullish for a stock, and it can go down 50%. Eventually, it will catch up with the value of a company. So that's why today I was buying, and if it drops more, I will be buying, because it's just obvious that companies with such a strong earnings grow, 30% is a lot, and they will eventually catch up to those metrics. Next, let's look at the Nasdaq, because that's actually where the action is going for a lot of the AI stocks. So it's down around 5-6% from the highs. Imagine if stocks would do, so the S&P would do like a 10 or 15% correction. I can assume that Nasdaq would drop even more, and I again will be buying that as well. We have seen so far this year that um, tech stocks, especially the Max 7, have been lagging, so not really leading. We saw the small cap index, the EV, which is the Russell, doing really good this year. So from the new year, it was up. Now actually had a decent correction since, so also down around 6%, but still up on the year. The fact is just that when you have tech stocks and also financial stocks actually lagging behind, those are usually the leaders of the market, and when the leaders of the market are not moving, you can talk about rotation. That means there is something structurally wrong at this point. The Russell, those are all small cap stocks. Those are stocks impossible to lead the market. We need stocks like Meta, Amazon, Google to cooperate in this bull market. Otherwise, the market will remain volatile, and yeah, just not enough power for the bull to continue higher. So that's why when markets drop again, when tech stocks drop again, you want to be buying those. The last time we had an opportunity in tech stocks was April last year. So Nasdaq April last year. How much was this? This was like 26% drawdown, a bear market for tech stocks. And even then, the forward earnings was growing, very bullish. I was, of course, buying here as well, and we had a V-shape recovery. So yeah, I was buying Apple, Microsoft, Amazon, all Max 7 stocks beside Tesla. I'm not a big fan of Tesla, and that's what I'm gonna do here as well. We have, of course, the war fears, but also the AI disruption fears of software. I've said it many times before. Um, AI needs software, and when you look at the details in the earnings, you're gonna notice that the big companies like Salesforce, ServiceNow, they are already implementing a lot of AI to make even more money. And that's all you want to see. Um, what you see in the headlines, um, you don't trade based on that. You have to trade or invest based on what you see in the earnings reports. And right now, to me, it's screaming bullishness. In the short term, we don't know how low it can go. It can go much lower, but you have to view that as an opportunity, because the lower it goes, it's like going to the mall, buy yourself a sweater with a 30% discount or a 50% discount. I prefer to buy at a 50% discount. It's the same for stocks in the market. Looking at some of the other commodities, so gold, silver, and copper were on my watch list. We managed to, yeah, participate in this rally for gold and for silver as well. Participate in this rally, but once things went so parabolic, it was just um, a sign for me to say, okay, I'm gonna step out, go on the sideline. I still hold a little bit of gold here at these levels, just because I think, comparing to silver, it has a little bit more room to go. Um, yeah, gold. I've also posted about gold, the 8 year cycle. Let me see if I can get it. Uh, Let me see. Yes, can't can't find the chart here, but I basically wrote about how gold is having these 8 year cycles, and right now we're kind of in the middle of the current 8 year cycle, where we could expect some, yeah, decline until let's say also November, like Bitcoin, and then a rally back up. So I'm keeping some cash to buy more gold in case it drops a little bit more. So that's my plan for gold. Same for silver. Let's say it can drop a little bit more until the end of the year and hit 70 or even lower again. Then I will also add more to silver in anticipation of a continuation of the bull market. Guys, I'm here on my screen. So if there are any questions, do let me know. If you want me to cover something, do let me know. I see Joe out there. Joe, thanks for joining. Love your work. Jeroen, thanks for being part of the community. Blackline, thanks for joining. Is there anything else to view? Just a quick look at the dollar, maybe. So the dollar, of course, if it goes up, not a good sign for the short term for stocks. But as I said before, these things, I'm not trading based on these things. I'm just looking at all the stocks I have on my watch list that I think are strong and have a lot of yeah, growth for the future, with high growth projections, earnings projections. If they sell more, if they have higher revenue in the future, those are the things that I'm watching for buying stocks. So yeah, not much else. I think I want to add. This was just a quick view in the markets. Let me know if you enjoyed. I can do this on a weekly or bi-weekly time frame. um, I don't mind. Going live is also always a little bit more stressful. I do it every Thursday on YouTube, by the way, with Market Buzz. But now alone is me just rambling. It's a bit weird, but I'll get used to it. So yeah, thanks for watching, and be yeah, steady in the market, stay safe. Remember to watch the fundamentals, remember to stick to your game plan, and yeah, see you next time. Thanks, Brooksy. Thanks for joining. Bye, guys.